So welcome back to Everything Marketplaces, where we talk with marketplace founders and leaders from some of today's top marketplaces. So this is episode 22, and I'm excited to welcome on Tim Fung, who is currently the co-founder and CEO of Airtasker. So Airtasker is one of Australia's leading marketplaces and one that connects people looking to outsource tasks and local services with individuals and providers for them. So Tim, before we dive into Airtasker, let's maybe start off by you sharing more on your background for those that might not know you, and then what led you to start Airtasker.
Sure. Well, thanks for having me. I'm Tim. I'm one of the co-founders and the CEO here at Airtasker. I guess my background. I did marketing in university. Came out and did 5 years in investment banking, mainly in like property and mainly in property investment banking and corporate advisory. I left the banking world in 2009 and joined a talent representation, a modeling agency called Chic Management. And I did that mainly because I was watching a lot of the show Entourage at the time, and I wanted to be like Ari Gold and go around doing deals with celebrities and stuff. So joined this agency and was really fortunate. Got to work with a bunch of Victoria's Secret models. People like Miranda Kerr were represented by the agency. I got through that. I met the chairman and the owner of the agency, a guy named Peter O'Connell, who was one of the founders of the second telecom network in Australia called Optus. And he gave me an opportunity to work with him on a startup called Amasim, which is a mobile virtual network operator. So we raised about $40 million of private capital, and I was really fortunate to get to work with the chairman and the CEO on the first half of that journey, and eventually that went on to IPO in 2015. 2012, had the idea to start Airtasker. And basically it came around because I was moving apartments, and I asked a friend of mine to come and help me move because he's got a truck that he uses to do deliveries for his chicken nugget factory. And so we put all of the stuff in the back of his truck and moved apartments. And this just got us thinking, why do we ask friends and family to do all these kinds of jobs when there's so many people out there that want to be earning money doing these kinds of jobs? And what we kind of realized is, on one end, if you're hiring someone full time, you have these really heavy processes like interviews and recruitment processes, and that kind of makes sense if you're hiring someone for a long-term commitment. On the other extreme end, you had like local notice boards and directories like Craigslist and Gumtree. But they were really lightweight when it came to things like offering payments and insurance, and didn't quite have that base level of trust built into the network. And so we thought if you could just create like an open and transparent system built on accountability, you'd be able to open up a lot of opportunity for local e-commerce in the services industry. And so that's where the initial spark for Airtasker started. And it was sort of a 6 to 9 month journey before we actually kickstarted and built something.
Nice. Thanks for sharing more on that. So in the early days, in those like 6 to 9 months, could you maybe share a little bit more about your initial kind of approach of how you got started building? Did you guys raise outside funding? Just a little bit more on that, maybe.
Yeah, so when building marketplaces, I think that one of the things that's common is that you actually do have to invest quite a bit up front, because especially if what you're building is built on network effects and liquidity and scale. So we got to work straight away building an MVP product with actually outsourced engineers. We did that. We put in our own money to be able to do that. And then we actually started almost immediately raising capital. And the reason for that was that I think you've got a good chance at the beginning of a marketplace before you've started to sort of sell the opportunity space before you have to start getting runs on the board. So through the connections that we built in our previous startup, Amasim, we were able to raise about 1.5 million, which was a huge amount of money back then, especially off the back of just a slide deck. And for those first period as we launched the platform, we were just obsessive about building out the liquidity in the marketplace, and so we kept a really tight leash on the burn rate, and we made that money sort of stretch over close to 2 years of operations. And yeah, like I said, in terms of building out liquidity for us, that meant driving the user generated content that's created on our platform, which is tasks being posted, and we just focused relentlessly on that. And it definitely was not the case of like finding silver bullets of things that worked. It was actually about just stringing together customer by customer individually to start building up the basis of that network effect. Looking back on it, there was a clear theme and thesis to what we did, but at the time it was definitely just acting on gut.
Yeah, that definitely makes sense. So, so maybe what were some of those like the initial kind of suppliers? Like, what were some of the kind of services that people were offering, and then some that people were looking for, kind of in the early days, and maybe how did that potentially evolve?
So one of the things about Airtasker is that it's actually a demand-driven platform. So the way it works is that you post a task as a customer, you post a task outlining the service that you're looking for, and that's done through an open form. And then taskers, service providers, will actually like make quotes or make offers against that task that was posted. And so they're almost reacting to that initial content that's created, which is the posted task. This is really tough because as with most marketplaces, it's often demand constrained, and that's where you're putting all of your effort. But we had this sort of doubling down of that problem because without the demand, you couldn't actually build the supply. What we kind of realized is that in order to like build a marketplace from zero, you have to think about how you can create like a 10x, like an amazing customer experience on both sides of the marketplace. And you've got to understand what drives that customer experience. So for us on the supply side of the market, it was kind of easier because what we realized is that everyone wants to earn money. So that's kind of like everyone likes money, everyone wants to earn money. It's a common language. So we kind of already started with a pretty strong proposition on the supply, the service provider side of the market. And we sort of turbocharged that by just removing all of the friction from that process. So we started out as an open marketplace where you could really start by just sort of like signing up with your email address. So very low friction. As a tasker, you could also instantly get started. So that provided like that instant gratification thing. You didn't have to wait 3 days for your account to be approved or anything like that. And then the third thing was that we created a pricing model, a revenue stream, in which it was totally win-win for the service providers. So you didn't have to pay anything upfront, and you didn't have to take any risk that Airtasker was going to work for you or not work for you. Basically, because we take a percentage of what you earn, we charge a fee based on what you earn. There was no risk involved. So that sort of sorted out the supply side of the market, which allowed us to focus on the demand side of the market, which was getting these jobs posted. And what we realized is that what Airtasker does well is that it allows you to get any kind of job done. So not just cleaning and gardening and hiring an electrician. It allows you to, if you've got a drone stuck in a tree, you can find someone who can get it down for you. Or if you need someone to like translate something from Hebrew to Japanese, in a live meeting, Airtasker will allow you to do that. And so what we did in retrospect is we focused on these like long tail of tasks, these things that you couldn't get done through traditional means like, the yellow pages or through, Thumbtack or something like that. And by doing that, we were actually creating an experience for customers which was like 10x better than what they could get elsewhere, because there wasn't any elsewhere that they could go to get those kinds of things done. And so by focusing on that long tail, we were able to create a great customer experience. And that's how we were able to build that initial liquidity on the demand side.
Nice. Thanks for sharing more on that. So how did you identify, I guess, at first, did you kind of come up with like these, the most common kind of the needs, and would you then kind of market those and, acquire those as far as the people that are looking for that demand? Or could you maybe speak to, how you kind of thought about that?
Yes, I think coming back to that 0 to 1 stage, um, we definitely did a combination of going after sort of existing service categories and trying to get really efficient at acquiring people for cleaning jobs or for handyman jobs. These services that already existed. But what I would say is that that wasn't our differentiated advantage in the beginning. And so it was really hard to make that efficient, and that would manifest itself in the sense of like, Google ads, it'd be a $50 cost per acquisition to acquire, individual customer. And, thankfully our transaction size is decent. It was around, $100. And, we would make a 20% cut out of that. But obviously if you're, it's costing $50 to acquire customers, that's not something that's going to be sustainable for a long period of time. And so at the beginning, I think it was quite important for us to focus on the long tail and how we could inspire customers with all the different things they could use Airtasker for, because that's where we were uniquely positioned. And then as we moved into that second stage, and once we built some liquidity, the network effects actually made the product better. The speed that you would get a response started coming down. The quality of the offers that you would get through the platform started to, really, really improve. So all of these things started to move in the right direction, which actually made marketing in some of those traditional channels much more efficient. And so, the cost of acquiring a customer through Google was coming down. And so eventually we could also tap into those channels. But I think the really important thing is that in that 0 to 1 stage, if we'd only focused on sort of traditional and existing categories in which there's intense competition, it would have been, it wouldn't have been sustainable to do that for too long.
Yeah, nice. So you did mention that just that point, maybe where you hit a little bit more kind of efficiency. At what kind of stage could you maybe speak to as far as for you guys, where you at as a marketplace?
Yeah, so I'd say it took us, 3 to 4 years for us to build up any kind of base liquidity into the marketplace. So we, 3 or 4 years, it was just hacking, and we were burning a lot of money during that period. Obviously, we had a product and engineering team, which is a fixed cost, and we had very few jobs. I think we had, couple of years in, we were still having, sort of single-digit thousands of jobs posted per month. And once you kind of take that all the way through the funnel, it's not a huge amount of revenue. And so basically our burn rate was sort of, building up over those first years, which was pretty scary. But eventually we were able to get that into being, quite profitable on a unit economic basis, and then more recently, have gotten the business to where it is now, which is, around 160,000 jobs per month, about 140 million in annual turnover, and enough revenue that we can be profitable and cash flow break even. But that's sort of been a 7-8 year journey.
Nice. Yeah, and then so what markets are you in, by the way, today?
So the vast majority of our revenue is in Australia. So we've been around in Australia since 2012, and And actually, it turns out that Australia is quite a good market because it's a high trust market, um, and it's actually dense enough in the sense that 70% of the population lives in two major cities. So you're able to just focus on those two major cities. Um, since then, we've launched into the UK, so we're doing a few million of GMV now in the UK, mainly in London. And more recently, we've launched into Ireland, New Zealand, Singapore, and aiming to launch into the US in the second half of this semester.
Nice. And then, so do you guys, are you're headquartered in Australia? Do you have teams in the other markets, or how do you kind of think about launching in other markets too?
So all of our product design engineering teams and the head office is all based here in Sydney. So we're about 100 people here in Australia. We've also launched in some localization. So first of all, we have a team in Manila that in the Philippines that does primarily our customer service and growth marketing for us. So our SEO team and our customer support teams are in Manila. So Sydney and Manila are really the central hubs. In terms of like localizing for each of those markets, so we've actually done some experiments here. So we've actually experimented with putting a lot of resource in the local team and really putting a lot into marketing to build up that initial liquidity. It turns out for us that there's counterbalancing forces there. It's really great to be localized because you can understand the local market, particularly for things like PR and supply side outreach. It's powerful to be local, but there is one real a challenge in it, which is that in the early stages you're still trying to figure out how the product actually works in those countries, and there are lots of tweaks that you just don't really anticipate upfront. So, we obviously ticked off standard things like making sure that the payment system could work in that country and that we had the right insurances and things like that. But there are a whole bunch of nuances which we didn't predict. For example, when we launched into the UK, what we realized there is that everyone talks in London about boroughs. And so all of their searches are all done in boroughs. So they'll say like, oh, I need a plumber in Hammersmith. Well, it turns out that Hammersmith, the borough, is actually not a Google defined area. Like Google actually defines things, in the logical computer generated way, which is all in terms of towns, but no one ever searches for towns. And so we had to go in and build all of this tooling to allow us to classify areas based on boroughs, which all had to be customized. And so we realized that having like these local teams, you had to stage that. You have to get your product and engineering right first before you go and invest a lot into localization. And so what we've actually done now is we've built our international teams in Sydney. So a team that is focused on making the UK localization work, but that sits closely with the product and engineering teams here in Sydney. And of course, time zones make it virtually impossible to do that kind of cross-country collaboration well.
Yeah, nice. Thanks for sharing more on that. And that was a great example too. So you mentioned SEO quite a bit. So I'm assuming that's one of your primary growth channels.
Yeah, so I'd say we have sort of two methods with which we go out to the market. On one hand, we have what I call like opening up the doors. And so that's things like getting the basics of SEO, email and push notification messaging right. All of these things, which are somewhat passive channels, you can't really pump a lot of capital in them to get them to fire up. They just kind of sit there and they're passive. On the other hand, if you don't ever invest into them, you'll never be able to get that really strong wave of growth in the long term. So we do this sort of opening up the market, which is where we are right now in New Zealand, Singapore, Ireland. And then we go to the extreme other end, and we go quite specific and niche and verticalized when it comes to actually injecting capital into growing the marketplace. So, for example, when it comes to things like PR or performance marketing, we take the opposite approach. We're very, very specific, and we're very laser focused in how we actually deploy that capital.
Nice. And then, so I actually listened to a podcast that you did previously, and you were sharing some about instant booking, and I found that very fascinating. Could you maybe share more about that, and then some kind of some of the nuanced decisions that went into introducing that from a marketing side too?
Yeah, so all of this sounds like it's really planned and strategic now, but certainly at the time it was more like, let's just try a bunch of things and see what's going to work. So I don't want to pretend like we had a master plan from the beginning and we sort of just layered on this stuff over time. But I'll speak about it as if it was strategic, so that it's sort of digestible. So what we've realized is that we started Airtasker with an open marketplace format, which was you could post any kind of job, and any service provider could just come on and quote against that job. And we relied on accountability and transparency to drive quality. So basically, you wouldn't quote on a job that you couldn't do, because why would you? If you have to be accountable and transparent for actually completing that job, there's no reason why you would do that. Which turns out to be a truism. People don't bid on jobs that they can't do. So we started out with this very open model. And it turns out that that is a really good foundation, because it actually is the catch-all for all kinds of jobs can go through that sort of open marketplace model. But then what we realized is every kind of service has a different sort of user journey that comes with it. And so, for example, for a service like finding a karate teacher, let's say you want someone to teach you karate, you want someone who's like the best local karate teacher. You're unlikely to go into an open marketplace and say, hey, everybody, I'm looking for a karate teacher. That's not the user journey that people want. What they would rather do is browse through a list of karate teachers, find the one that actually meets their needs, get inspired by what that person has to offer, and then pick the karate teacher from that list. And so what you can see there is like the service of getting your toilet fixed is very different to the service of finding a karate teacher. And so you needed to have like different marketplace models to be able to carry users through this user journey of ultimately getting to a service that they're paying for. We've just introduced a new model, which is called a listings model, where service providers can list up all the services that they can do, and then customers can instantly book those services. But we actually see a future in which you can take that even further. So, for example, rather than the service providers, the taskers coming up with the service package, it could actually be Airtasker coming up with the service package and saying, here's the defined thing. It's $200 for this amount of service, and then connect both the buyer and the seller into that defined contract. So that's another model that we have built. And then another model that sits on top of that is, for example, subscriptions. So say that you want that same service, but you want it to recur every week. Basically, we have a different marketplace model to attack all the different kinds of service verticals that exist out there, because the user journey is definitely different across each of them.
Nice. That's super interesting. And yeah, thanks for sharing more on that. So on the subscription, I'm assuming that you introduced that to the higher frequency needs initially.
Yeah. So I mean, leakage is that massive, issue for all marketplaces. We don't obsess over leakage, to be honest, because I think that if you focus on leakage, it's the wrong direction to be going in. Like, you should be focusing on how you're going to get customers to get value out of your product. If you focus on that, then leakage will solve itself, because you'll be creating enough value that customers won't want to go around you. Subscriptions obviously does solve things like leakage, and I think a lot of companies do immediately want to go after that subscription model. But when we actually boiled it down, there aren't that many services which occur on like that regular frequency. You know, there's sort of the obvious ones like lawn mowing and cleaning. But in many cases, the service requirements are constantly changing over time, or they're not happening on a regular cadence, or it's actually that the customer wants to have a different service provider each time. And so finding services that are sort of productizable and then repeating on a regular cadence and that are predictable upfront, that subset actually becomes pretty small. I think it's sort of cleaning, lawn mowing, and there's definitely others too, but ones that have a big addressable market are probably somewhat limited.
Got it. Got it. And then, so how is your kind of your product team? Are they do you have kind of teams around each specific kind of category or revenue driver? Could you maybe kind of speak to that?
Yeah, so we've experimented with almost every structure you can probably imagine. So when we started, of course, we were one team and it was very functional. So it was really engineering, design, product management, and it was very much like a waterfall process because the company was just one homogenous group of people. So not homogenous, but one working on one product at a time. As we started to grow, we moved that into cross-functional teams where we call it the Hydra. We have product design, engineering, marketing, and data all working together in different combinations. And initially, we had started that on a customer basis. So we said one side's working on supply, one side is working on demand. We kind of realized that doesn't really make a lot of sense because actually a lot of things that you do to help the demand side, you actually have to work on the code base which faces the supply side. So splitting it up by code base doesn't really make a lot of sense. And now what we're doing is that we're moving to a model in which we base it all on our strategy. So every semester we build out a sort of strategy document, and then we allocate capital based on strategic initiatives that we want to tackle, and that's pretty much defined by OKRs. So we'll say, here's our overarching strategy. Here's all our OKRs tie up to our overarching strategy, and then each team is responsible for nailing a set of OKRs.
Awesome, cool. So I actually have a few people that have DM'd me with some questions. So we're going to jump into questions here in a second. Out of curiosity, though, so what's the most interesting or kind of like random request for service that you've seen that you maybe didn't expect?
So one of the really interesting things about Airtasker, so we have about, we're seeing about 7,000 tasks being posted a day now. So basically every day is just crack stuff coming through, which sounds crazy to you or I, but when you drill into the stories, does make sense. So there's so many stories, it's just there's too much to say what's the craziest. But look, some examples would be that are interesting. We had a woman who was obsessed with Star Wars, wanted to get married in a Star Wars themed wedding. So she had two guys dressed up as stormtroopers to walk her down the aisle. We've had people doing romantic gestures for each other. So at Valentine's Day, we had someone who really was obsessed with Game of Thrones. So had their entire apartment decorated like as a Game of Thrones set for their date night. So we get all sorts of like crazy stuff coming through. And actually, it really is this user-generated content, which is a big engine for how we can drive growth.
Nice. Those are definitely two good ones. So never would expect that. So cool. So hey, Rich, did you want to come on and ask a question?
Yeah, sure. Hey, Tim. It sounds like your investment banking days with your modeling are serving you well. And I'm curious, a lot of founders on the group chat talk about cost of acquisition, and investors probe them and say, what is your long-term CAC kind of expectations? when you were in the early stages going through fundraising and stuff, did you have an idea on what your CAC would be, and how does that compare to what it is today?
Yeah, so I think this is like definitely one of the interesting topics where I think it's quite different between SaaS products and marketplaces, and why I think a lot of the content that's out there that sort of talks about, CACs and LTVs can actually like not necessarily be useful for marketplace founders. And the reason for that is that um, especially if you're a product that's built on network effects, acquisition of the first customer is probably going to be equivalent to like $1 million, because basically you have to build an entire platform, build a website, and obviously for your first customer, there is only one customer to it. And so, your first CAC might be $1 million. And then in terms of like the LTV and the value that customer drives, I think it's hard to tell early on, because first of all, their conversion rate is probably going to be really low to actually having revenue. Your take rate's probably going to be really low because you have no market leverage and no market power to be able to price a fair take rate. And then also that customer is going to not only have value in the direct revenue that they provide, but they're also going to add to the liquidity and the network effect that you're building for later customers. So they'll also have this value of increasing LTV for later customers and reducing CAC for later customers. And so I think it's really like there's so many threads that are going in the right direction there as you scale, that like looking at the CAC on day one is probably a diversion of where your attention probably should be. Now, I think it's different if your model is not so much built on network effects and stuff. So I think if I look at platforms like HomeJoy and Handy, that were cleaning marketplaces in the early days, those models are not so much built on network effects and stuff like that. And so in that case, I guess you do have to look at the CAC LTV equation day one. But yeah, depending on how much your marketplace is driven by the scale itself and how much the scale actually impacts the customer journey, the more that is the case, the less I think you need to be looking at the CACs and LTVs day one. But it is scary because everyone wants to know the future, and every investor wants you to forecast and just tell them that everything's going to be okay, which is a natural human requirement to know that you're safe. But I think it's virtually impossible to do in early stage marketplaces, and similarly social networks and things like that.
Super interesting. Thank you.
Hey, so Tim, I actually had a question for you, if you're comfortable sharing it. But when you introduced the instant booking on the supply side, could you maybe speak to the impact that had on your CAC?
So definitely instant booking helped us to reduce CAC, to reduce friction, increase conversion rates, and thereby have a positive impact on CAC. So basically what our original flow is, like, you've got to post a task, there's a drop off in that flow because you've got to create all of the content as the customer. Then you had to wait for offers, there's a drop off there. Like, do you even come back to the platform at all to check your offers? Then when you see your offers, there's more drop off because, did you find the right person to do your job? All sorts of reasons. So there was this massive funnel drop off at each of those points. And what instant booking did is it brought all of that stuff up front and said, make a decision right now. And so the net drop off on that was much, much lower. And so the impact on CAC is definitely positive. The trade-off though on instant booking is that you would only build instant booking for fairly large addressable markets like cleaning or moving homes or lawn mowing, things that are, that there's enough people to warrant investing into an instant booking, flow. Because there's definitely upfront investment in doing that. You've got to get the supplies ready, set standards, understand pricing, all of that sort of stuff. And because you end up going after these categories which are more common, the CACs are really high in that because lots of other people are going after those categories too. Like, there must be, if you do a search for cleaning, I think there's 40 different people bidding against that keyword. And so the CACs super, super high. And so even though instant booking does reduce your CAC, it also starts off a very high CAC. Whereas if you're doing PR to tell everyone about how they can use Airtasker to get a drone stuck out of a tree, you're not competing with anyone. So your CAC is very, very low. So even though there's higher friction, the end-to-end CAC is actually, in absolute terms, less.
Got it. Cool. Thanks for sharing more on that. That was great. Well, hey, Andrew, did you want to come on?
Hey Tim, I'm actually in Tankstream Labs right now in room 8.
Sweet.
Yeah, so good to meet again. We met a couple times before, but good to be in this.
Cool, good to see you again.
Yeah, no, this is more of a question about, I guess, trust, and obviously you've built that, and Australia has quite a high level of trust. Going into the US, how are you altering the platform to kind of build upon that? Because maybe it's more of an assumption, but I don't think the US ranks as high as Australia on levels of trust.
It's a good point. So I think one thing that would point towards that is like the level of like litigation in the US is kind of higher. Like for I guess the liability of working with another person, you can get sued more easily. Quite frankly, in the US than you probably do in Australia. But my thought on trust is that overarchingly, I think people assume that people are much worse than they actually are. And so like our motto as Airtaskers, we think that people are better than we might intuitively assume. And so if you create that platform and you create something that's open and transparent, we feel that people are not going to try and do the wrong thing. Like there's actually, when you really think about the incentives, there's no reason to like post a task on Airtasker, invite someone to your house, under the pretense that they're going to be an electrician, so that you can beat them up or something like that. There's no reason to do that. If you wanted to do that, you just do that in the street. So we actually do believe that that basis of accountability and transparency does build the right amounts of trust. That said, I think that does build over time as you build network effects. And so the categories that you go after at the beginning should actually be categories, again, in which there's low competition and which there aren't a huge amount of alternatives. So for example, if you need someone, to stand outside a fish and chip shop, you probably, and hand out flyers, for your business, you probably don't need that super high bar of trust because there's not that much that can go wrong in that instance. And I think we'll likely start with those categories. But then over time, what we've seen in Australia is that once you build up to those thousands and thousands of jobs and you've got a lot more reviews and people care more about the system, then you can start to facilitate things like architecture, tax returns, 3D printing, all of these kinds of more higher trust jobs. So we're likely just not to start at those kinds of categories early on in the US.
Great, thank you. I mean, if it's okay to do a follow-on question, I mean,
Sure.
trust is trust in terms of safety, but then trust in terms of, I guess, the quality of candidates. So I know that it's an open platform, and then you mentioned that you start off with the lower types of jobs. But so we were running Shift Hero, which is the hospo marketplace, and even if you had someone handing out flyers, the amount of businesses we come back saying, oh, they're getting piercing in their left ear. I'm like, well, so how do you kind of overcome those types of things?
Well, I think that's a really, really great point that you mentioned. I think there's two things there. I think one is like setting expectations. So I think that like some marketplaces, in the interest of being able to like increase customer acquisition, they will be like, we offer 6-star service. Every person that we have guaranteed to be the most awesome person you've ever met in your life. Just trust us. And you're incentivized to do that because you're trying to get customers to convert, right? However, I think that comes with the side effect that then the customer takes their foot off the pedal in terms of taking any responsibility. So they'll be like, oh yeah, I'm not going to choose the person, you're choosing the person. And when they turn up, if there's anything less than 100%, then you're to blame. It's not me making any of the selection, it's not me going through that process. So I think there is some element of expectation setting, which is, important to get right. And certainly, for Airtasker, that is challenging because, I think most people are aware of how the marketplace works, but some people are not. Some people just think, it's the same as if I buy a pair of Nike shoes and they're slightly discolored, replace them for me right away. So I think that is one aspect is setting expectations. I think the other thing that's important to note there is that services are different to products in the sense that they're not standardized and commoditized. And so I think that like every different service has a different, and every different service and every different customer is going to have slightly different expectations of what awesome is. So you mentioned that, you have someone hand out flyers outside the fish and chip shop and they have a piercing in their ear. Now, I would say that I don't care if you have a piercing in your ear, if you're handing out flyers. That said, maybe if you're a model who's doing, a shoot for my website, I really would care about the piercing because, that's not the look that I want on my website photos. And so I think for like every different category, the criteria is different. And because of that, I think that our approach has been to show transparency in all the information. So give the people the opportunity to ask the questions and make sure the information is available where it's needed, but don't try and be the arbiter of quality because it's very hard to do that and potentially impossible to do that. Even if you standardize the service, if the customer just has a different expectation, it's going to be very hard for you to meet that each and every time.
Great. Thank you very much.
That was super insightful. Thanks for sharing more on that, Tim. So I did have a follow-on question to that, which is when you guys are kind of packaging up and offering those services yourselves as a marketplace, how do you kind of change your messaging and what your, as you kind of mentioned earlier, in the expectation settings from that versus kind of the open marketplace model?
Yeah, it's a great point. So when you go through an instant booking flow on Airtasker, we have about 3 or 4 pop-up screens that kind of go, you're now entering instant book. This is how instant book works. It is different to open marketplace. And by the way, this is instant book and it's different to open marketplace. And it is, so we just kind of drill that in to people. So there's definitely a lot of messaging to change that expectation. But I think that it does draw upon a really interesting point, which is that when you try to standardize something into something like an instant book, inherently as a company or as a platform, you're going to become more risk averse because you're saying, I need to stand behind the quality of this service. And, if the person isn't happy with the service in a fair way, we're going to refund you and all of these kinds of things. You're really standing behind it. And because of that, you're going to go towards low risk categories and you're going to lower the bar. So for example, we're not going to say, hey, for instant booking, you can find a cleaner at 4 a.m. on a Tuesday morning within 6 hours. You're probably not going to be able to do that through instant book, and we're not going to be able to stand behind that promise. So we're not going to make it. And thereby we get really risk averse and we probably don't offer it. Thus, we only offer a very few categories in instant booking: cleaning, moving. I think we offer lawn mowing now as well, but very limited categories. And I guess this is what I mean by when you standardize, you have to stand behind it. Then you get risk averse. Then you go to the lowest common denominator. Then you don't offer much. And then by the time you're at the end of that, what you end up doing is saying, oh, what I can promise you is in a week's time, I'll definitely get you a person who'll come to your house in a 4-hour window and get the job done. And it's some really basic job. And I think that that's like a low trust kind of model. And by doing that, you can't offer much. So I think that's where our open marketplace actually is able to take a bit more risk because you're actually letting the 2 independent parties work together on it. And by doing that, you can address a lot more different categories. But I think both of them have merits. Instant booking is definitely lower friction and more convenient. So for certain categories, that trade-off makes sense.
Nice. And then what do you kind of see as the future? whether it comes to like the open marketplace, and or instant bookings?
So my view is that, if you kind of look at it as a pyramid, you kind of have the open marketplace, which is constantly evolving as new services are required. So for example, I look on Airtasker now and there's jobs for like TikTok marketing, right? That's just something that would not have existed, 5 years ago. And so the open marketplace model is there to capture all of those sort of long tail things, and also there to keep evolving and evolving as new services are created or new customer problems are created. But then I would layer on top of that things like the listings model, which we mentioned, instant booking, and then subscriptions. But the way I look at it is, as the market evolves, you can have more of those things like instant booking and subscriptions, but there'll always be a need for that base layer that continues to grow outwards. And so I do think that even in the long run, you need to have a whole different range of different marketplace models to capture the, to address the whole services economy. And overarchingly, I'd say that I think in 5 or 10 years, we're going to look back and say, wasn't it mad that, back in 2020, you had Amazon that could offer you like e-commerce to like buy stuff like that, but yet in services, people were still like using, Craigslist, Gumtree, asking friends, like all of this kind of like completely old school Ice Age stuff. Like, how could we not have lived in a world in which you need service, you should be able to buy it online, just like any other kind of product?
Yeah, that's a great point. So cool. Hey, James, did you want to come on and ask that question?
Yeah. Hi, Tim. My name is James. I'm from Melbourne, Australia. So I'm working on an early stage service marketplace as well, connecting tutors and students. I guess my question is, obviously, as an early stage, you don't have income, you don't have revenue. Marketing is very important, but we can only do so much paid marketing. And you talked about how SEO really helps long term as well. But within the short period of time to capture the market, what's the best strategy? Because we found that the supply side, which is tutors, is really easy to capture because they're always looking for work. Whereas students, they need more time to think, they need more time to connect with tutors, see if it's the right fit. So what would you recommend? What would be like the best strategy or one of the best strategies for that?
So I think that this is the balancing act of marketplaces and why there aren't that many, at scale marketplaces, because this is a really hard period to get through. I would say, you kind of got a couple of dials that you can turn. I think one is obviously raising capital, which is why I think marketplaces tend to raise more money up front, because you do have this imbalance where, it's still going to be high cost of acquisition because you're, you don't yet have the scale and the brand to be able to bring in customers cheap. And yet that at scale, it's going to be valuable. And so to get through that period, like one answer to that is raising capital, so you can do paid marketing. I guess if I was to think about like the portfolio of stuff that you need, I think you need a combination. I think you need to be doing things like SEO and brand, like PR stuff, because over the long run, those things will keep paying dividend over time. And so you've kind of, you're building that rising tide. It's very slow, but if you're just increasing your traffic by a couple of % a month, that's really, really powerful over a long-term compounding situation. But in the short run, you can't wait for that to be the only thing that's going to deliver. And so, then I would be injecting, things like paid performance marketing and be very ruthless with getting the efficiency on that. So in your case, probably SEM probably does make sense in very small quantities. The alternate to raising capital is just to build something that is profitable, and thereby there is no rush. Just constantly moving along, and you can move at a slower pace, and that can be okay. The only issue there is that if someone else comes in and raises capital, then it's going to be head to head, and that's going to be tough. But I think in an ideal world, you go slowly, you build slowly.
Yeah, absolutely. Just a follow-up question with raising capital. I always thought if you don't have like product market fit or you haven't reached liquidity, you can't really raise capital, right? When is a great time to raise capital? And obviously, from investors' point of view, they want to see some proven track record of some sort.
Yeah, this would be another one where I think, it's really hard, because I think a lot of that advice comes from SaaS products where, you in a SaaS product, you work on the software, you engage a small number of customers. Once you see that those customers love you, you scale the marketing, and that makes sense. So therefore, you don't raise capital until you have product market fit in SaaS companies. I think in marketplace companies, the product is the marketplace. The marketplace is made up of not just the software product, but also the liquidity in the marketplace, i.e. the access to all the tutors that you have. Yeah. Thereby, you haven't even built your product yet, but you need to be acquiring customers to build your product. Yes. Like, your product is not the software is just the website. What customers perceive as, like, what's driving the customer experience is coming to your website and finding all of these amazing tutors, right? And so I think that it's a fallacy that you shouldn't raise capital in marketplaces, until you found product market fit, because you haven't even got a product. So yeah, that's why it's higher risk, and that's why it's harder to raise money. And again, that's probably why there aren't that many at scale marketplaces. In terms of timing, I would say, again, like SaaS companies, they raise on multiples of revenue. It's kind of like, if I'm at a $1 million run rate, I should be able to raise at a $20 million valuation, something like that. And they just keep doing that. With marketplaces, all the value is later down the line. Day one, that first 10,000 transactions that you're getting on your platform, that is worth a lot, because you've gotten 0 to 1. That's amazing. The next 10,000 transactions, not so much. And when you're moving from 1 billion transactions to 1 billion plus 10,000, not that much. My point is, the value is all down the line, which just means it's going to be a riskier investment for investors, and you're probably going to cop a bit more dilution than a SaaS founder would.
Gotcha. Thank you so much, Tim.
That's a great answer. Cool. So I think we got time maybe for one more question. So, hey, Rich, did you want to come on and ask last question?
Yeah, sure. Hey, Tim again. I'm curious about geographically Australia and your decision to go for more of this horizontal approach. I've heard Jason Calacanis, talk about the Australian market, just drag and drop what's working in the US to Australia as a kind of proven idea. Was that kind of the thesis that you had looking at these big horizontals that had been successful in the US, or had nothing to do with that?
No, not so much like the Jason Calacanis insight. I think again, where we have been contrarian to like popular popular insights on building marketplaces. A16Z, for example, Andreessen Horowitz has a lot of literature which talks about managed marketplaces and verticalized marketplaces. And my school of thought is the complete opposite of that, which is like, rather than manage it, release it, let people trust people first, let them do stuff, have transparency and accountability so that they can't get it too wrong. And then don't verticalize, be horizontal, because in horizontal is where there's actually some sort of differentiated advantage. In vertical, you're going head to head and you're competing actually on quality of service. And actually, if you think about like competing on quality of service, you're almost definitely going to be beaten by someone who's got a more intense operation than you. Like, maybe technology can help to streamline your services and make it better, but most likely, if you're competing based on we are better matching, we offer better customer service and all these kind of things, a small agency, a boutique agency, is probably going to be able to do that better than you can. So if you kind of think about like a scaled internet product, you want to be building off something which is actually driven off like network effects and leveraging the power of the internet. And I think actually horizontal marketplaces do that more than vertical marketplaces. But I would say that vertical marketplaces are much easier to get off the ground and start, because they look very similar to agencies, boutique agencies. And so it's easier to get from 0 to 1 if you're starting a cleaning company. It's very difficult to get 0 to 1 if you're starting like a generalist horizontal marketplace. But I'm fairly confident in saying that scaling from 1 million users to 2 million users in a horizontal marketplace is easier than in a vertical marketplace. I think in a vertical marketplace that would be really tough. Yeah. And if you look at things like Uber, I think that like obviously it was a great product which was able to get some massive scale. But if you look at the downside of it, there's actually not a lot of defensible moats around that business, which is why they're constantly fighting with Lyft in the US, or with Didi in China, and they can't really build a marketplace in the same way that say Facebook, Airbnb, and Google, which are built on network effects, has been able to get that escape velocity and thereby kind of become super valuable.
And if you were starting this today, knowing what you know now, would you go after the same type of supply, or would you tackle like a different horizontal marketplace?
So we didn't really have to go after supply. We actually, just went after demand. And I think I definitely would have done things more efficiently. I don't think I would have done them completely differently, but I would have done them. I think I could have done them a hell of a lot more efficiently, and done something in a year instead of taking 5 years to figure it out.
Good insights. Thank you.
Awesome. Yeah, this has been great, Tim. Thanks again for taking time to join us. This is definitely incredibly insightful. And you're our first Australian guest, by the way. So
oh, awesome.
Yeah. So is there anything kind of exciting that you can share as far as like what's coming up ahead for Airtasker?
There is a few things going on. Some of them I can't share today. Some I can. I guess. What am I most excited about right now? Certainly international expansion is really, really exciting, trying to get that right. The size of the opportunity there is just absolutely massive, and we haven't really seen too many comparables to what we're doing. Even in the US, we haven't seen too many like at scale comparables, so really excited about that. The other thing that we're doing is, building out this Tasker listings product where you'll be able to list out what you can do for a certain amount of money. So it'd be cool if everyone here would get on Airtasker, or for those Andrew and James who are in Australia, we're releasing it in Australia first. Get on there and create a listing. My listing on there is I'll review your pitch deck for $500, and I'll give you 3 points of feedback and a Zoom call afterwards. So you can book me if you want. I know it's pretty pricey, but yeah. Anyway, I've got a full-time job, that's why. Yeah, I'm really excited about being able to like create this listings product, because I actually do think it's a good way to help contribute back to the economy, which is going to have to rebuild after this COVID mess.
Nice. Awesome. Well, I'll definitely share more in the group, and yeah, I was hoping you'd say that you're launching in the US soon, so that way Rich and the rest of us in the group can check it out too. But cool. So where can we keep up with you, by the way, on social? Just as a quick kind of plug.
I'm actually I've gone silent on Facebook and Twitter, but I'm on LinkedIn, so I'm just Tim J Fung on LinkedIn.
Awesome. Well, thanks again, Tim. This was super insightful, and it was great to have you join us. So, and awesome. Thanks everyone else for joining.